Hey, what is going on, guys? My name is Nick, and given the wild market swings lately, I'm finally bringing back an old series where I talk about the top 3 undervalued stocks that I'm buying right now. Lately, growth stocks, among others, have been getting absolutely crushed, even though the S&P 500 really isn't that far off of all-time highs. But in my opinion, this is of course just presenting great buying opportunities to continue adding to my highest conviction stocks, which I will be discussing in today's video. So if you do enjoy, make sure to drop a like on the video to help support my channel, and if you haven't already, please consider subscribing and turning on those bell notifications. And just so you're aware, I alerted my Discord community of investors immediately after I made all of these stock trades where I explained why I bought the stocks that I did. So if you want to stay informed on all of my buys and sells on the stock market, make sure to sign up using the link in the description or the pinned comment below so you can get access to this community of investors. And the first 25 student members will also get access to free weekly group coaching calls with yours truly. Anyways, with that said, let's get straight into these 3 undervalued stocks that I've been buying. Now, the first undervalued stock I've been buying on the dip recently is Trulieve Cannabis with ticker symbol TCNNF in the US or TRUL.CN on the Canadian exchange. As you all know, Trulieve is the largest position in my stock portfolio right now because I believe there's so much upside long-term and potential with this investment. So this week I decided to buy 81 more shares of TRUL.CN at an average price of $30.72 per share, which was a total value of nearly 2,500 Canadian. Anyways, for those who aren't aware, Trulieve is the biggest and most profitable cannabis company in the US, which has most of its dispensaries in Florida, but through their recent acquisition of Harvest Health and Recreation, they've expanded into other states such as Arizona and Nevada. And for this reason, Trulieve is known as a multi-state operator, or an MSO, which also makes them vertically integrated, so they have operations spanning from the cultivation of cannabis all the way to the dispensaries where they sell it. Now, most people don't realize this, but there's actually a stark contrast between the Canadian and the US cannabis companies. The Canadian licensed producers, or the LPs, are bleeding money like crazy, making cannabis seem like a risky sector to be invested in. And just look at these results from Canopy Growth, one of the top cannabis companies in Canada. They're absolutely disgusting, just awful numbers. However, many of the US MSOs like Trulieve are actually very profitable, in fact, so just check this out. In the latest quarter, Trulieve produced revenue of $224 million with a gross profit of $154 million, being a gross margin of 69%, which is unbelievable. Then they were able to produce an EBITDA margin of 44% and net income of $18.6 million, which was despite the high costs associated with the Harvest merger in this quarter. But as you can see, the company metrics have been growing steadily over the past 3 years, where Trulieve started with $32 million in revenue and $8 million in net income in 2018, but now they've increased both well over 10x in a matter of 3 years. Now, looking at some more recent data, we can actually see from the Office of Medical Marijuana Use in Florida that Trulieve sales have been exploding like crazy ever since their merger with Harvest. Throughout the week of December 3rd, Trulieve sold 101 million milligrams of THC out of a state total of 220 million milligrams, which represents a market share of 46%. This compares to last month around the same time when Trulieve sold only 85 million milligrams of THC, so they've already increased sales 19% month over month. Furthermore, during the week of Black Friday, Trulieve just knocked it out of the water. They sold 136 million milligrams of THC out of a state total of 256 million milligrams, being a market share of 53% despite only having 110 out of 385 total dispensaries. However, despite the business continuing to grow and improve its fundamentals, this is not being reflected in the stock price, where it's basically sitting at its 52-week low. Right now, Trulieve has a trailing PE ratio of 37 and a forward PE of 19, which for its growth and compared to others in the industry seems quite undervalued. Additionally, the price to sales ratio has come down significantly from above 10 earlier this year, where it's now sitting at only 4. Overall, these recent OMMU numbers, as well as the discounted valuation right now, have just made me even more bullish on Trulieve over the long term, and this is why I continue to buy the dip. All right, now the second stock that I've been buying lately is arguably the most undervalued of the bunch, and that would be Suncor Energy with ticker symbol SU.TO in Canada, or if you're in the US, it's SU. So this week I continued adding to my position in Suncor and bought another 67 shares of SU.TO at an average price of $29.50 per share, which ended up being nearly 2,000 Canadian dollars. Anyways, for those who aren't aware, Suncor Energy is Canada's largest integrated oil and gas company, with their operations spanning from the oil sands extraction to the pump stations. Now, many people might completely disregard Suncor just because it's in the oil and gas sector, but if you're looking for a deeply discounted stock with improving fundamentals, it's very well worth looking into Suncor. So obviously Suncor got hit extremely hard during the pandemic, but over the past 3 quarters, they've been improving their profitability and returns to shareholders significantly. That's because the price of oil has shot up like crazy and has maintained above $70 per barrel over the past several months, while Suncor's break-even price is $35 per barrel after paying dividends. And given that the economy is still reopening and the demand for oil keeps rising over the near term, this should keep oil prices propped up pretty high. In fact, the last time oil surpassed $70 per barrel back in 2018, Suncor stock was trading at $55 per share, which would represent 80% upside from today's price. However, analysts only have a $40 price target, which is still over 30% potential upside over the next 12 months, and that is great to see. So now here are some of the highlights from their recent Q3 earnings report, and they are pretty insane. Firstly, Suncor reported earnings of just above $1 billion or 71 cents per share, while they produce free funds flow of $1.5 billion, which is essentially free cash flow in oil and gas terms. Based on the trailing 9 months, Suncor produced $3.8 billion of free funds flow, which is an 8.3% yield on the shares right now, which is just insane, and this should increase further in Q4. Secondly, Suncor doubled its dividend back to 2019 levels from 21 cents per share in the pandemic to 42 cents per share per quarter, which ends up being $1.68 per share annually. And based on the current share price, this is a dividend yield of about 5.5%, with the payout ratio sitting around 50%. Thirdly, Suncor announced an increase to their share repurchase program by another 5% of outstanding shares, which is honestly insanely awesome to hear. And since the share price is so low for Suncor right now, this allows management to repurchase many more shares than they could otherwise if the stock price were a lot higher. Finally, for 2022, Suncor is expecting to have production of 750k to 790k barrels of oil equivalent per day, which would be 5% above 2021 levels. As a result, management expects an increase of $400 million in free funds flow as a result of synergies, cost savings, and margin enhancements throughout 2022, which is great to see. Finally, in terms of their valuation, Suncor is trading at a fair trailing PE of around 20, but their forward PE is only 8 right now, which is ridiculously low. Overall, guys, I just can't see any downside in this stock as long as oil stays propped up over the near term, and I'm sure that Suncor's stock price will follow as long as oil stays relatively high. And I absolutely love the fact that management is focusing on repaying their debt as well as rewarding shareholders through dividends and share repurchases, so this is great to see. Finally, the third and last undervalued stock that I've been buying this week is Google, with ticker symbol GOOG, or goog.ne if you're in Canada. This is on the NEO exchange. So this week I bought 64 shares of goog.ne at $24.84 per share, being a total investment of about 1,600 Canadian dollars. And I have just recently started to build up my position in Google, so if the stock drops further, I will be buying more, mark my words. Anyways, you all know Google, so I won't get into explaining the company, but I do want to share Google's insane competitive moat that they've been able to develop, making this one of the best investments in the stock market. For the past decade and longer, Google has been able to maintain a market share of greater than 90% when it comes to the online search market. And as a result of this, they've been able to continue increasing revenue and EPS literally every single year without a gap as more advertisers transition to the online ads. Now, in the most recent quarter, Google saw revenues increase 41% year over year to $65.1 billion, while their EPS increased 71% year over year to $27.99, beating estimates on both the top and bottom lines. As for their balance sheet, Google is holding $142 billion in cash and cash equivalents, which again, I believe is the best in the entire stock market. Moving on to valuation, Google has a trailing PE ratio of 28 and a forward PE of 26, since analysts think that the company will only grow 4% next year. But personally, I think this is a steaming pile of bullshit. Google somehow always continues to grow at unprecedented rates, and I believe in 2022 this momentum will continue and they should continue to outperform the market. Also, we can see here that Google has a PEG ratio of 0.86, which is incredibly low. And as I mentioned in my investing plan for 2022, I plan on buying companies with PEG ratios below 1.5 So this fits the category perfectly. So overall, with the e-commerce market expected to expand by another $1 trillion by 2025, I believe that Google is going to benefit substantially from this, and there are going to be many more advertisers online using Google Ads. Anyways, the three undervalued stocks that I've been buying over the past week are Trulieve, Suncor, and Google. And in my opinion, I believe that all three of these companies have significant upside over the next few years, but we never know what's going to happen in the short term, so we'll just have to wait and see and keep investing while they're low. But yeah, if you did enjoy the video, guys, make sure to drop a like to help support my channel. And again, don't forget to subscribe and turn on those bell notifications. It really helps me out, and you don't want to miss any of my future uploads in 2022. And with that said, I will see you guys in the next one.